Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and today we're going to turn some of our attention towards some possible liquidity problems coming up in the near future. We're going to be thinking about that as well as some of our regular options metrics for forecasting what will be coming up in the near future. That's coming up today. Before we do that, we will turn our attention to a little Bible study in honor of our dear friend Richard Newton. And today we're looking at Genesis 1 through 5. I want to think about this book in particular because this book in many ways has been very influential towards me in understanding what it means to be a creative versus a consumptive individual. That's something that has been incredibly important for me in my life as far as shaping my thoughts, shaping my perspective, shaping my values. And it's part of my mission, and part of my mission here, of course, with the 21st Century Renaissance as a whole, to help others understand just what it means to further that creative potential that is within them. So without further ado, we'll turn our attention to the book of Genesis. And we begin with a history of creation itself. And it says, in the beginning, God created the heavens and the earth. The earth was without form and void, and darkness was on the face of the deep. And the Spirit of God was hovering over the face of the waters. Then God said, let there be light, and there was light. And God saw the light, that it was good. And God divided the light from the darkness. God called the light day, and the darkness he called night. So the evening and the morning were the first day. Something I think in the Hebrew translation, it goes like, it was evening and it was morning the first day. This is a little bit of an older translation. The King James Version, of course, has this very poetic weight to it. But really, what do we see here, right? And of course, we begin, of course, with this idea, which is specific to the Greek name and then the names thereafter. So our names for the books of the Bible, especially in the early books, right, are not direct translations of the names from the Hebrew Bible, right, written in Hebrew. In fact, in Hebrew, usually you'll use like the first couple phrases. So in Hebrew, the name of this book is Bereshit, which means just in the beginning. And you'll notice, my Greek scholars out there, of course, that in the beginning in Greek is actually en arche. So why is this book called Genesis? What does Genesis or Genesis actually mean? It means becoming. It comes from the word ginomai, ginetai, to become, right? It is a sort of perfective idea of being, to go through the process of coming into being, right? Coming to be, becoming. So that's what Genesis means, right? And of course, right, we see this a lot. Egeneto, so it happened, or so it came to be. Egeneto. In the Greek translations, at least. So, right, what we have here is we have an idea of the process by which things come to be. And there's a very strong idea that's posited right at the front of the story that says, right, whatever God is something that lies outside of the boundaries of space and time. Because what we see in this passage, right, what we see in these first 5 verses is we see an active force, whoever this God is behaving in such a way that it brings space and time into being, right? There is no form. Everything is only void. There is darkness on the face of the deep. So there's something called the deep, and there's something called the void, and there's something called the earth, but it has no form. And there are waters someplace, right? So there's this interesting configuration of a place that is no place, but it is full of potential. Of course, water and its ability to flow and take the form of many different things, indicative of the idea, or let's say metaphorically representative of the idea of potential itself. And then things come into being, right? Whoever this God is, he speaks things into being. He has some sort of power of voice that brings things from potential into actuality. And the first thing that he does is he creates a contradistinction between the darkness, which is there, this sort of nothingness, this void, this emptiness, and something. And the first something is light itself. Light from where? We don't know, just light, and it comes into existence. And thereafter, right, it is only following that what we get after is both, right, we get time by virtue of this, right? We get seeing, so God sees light, declares it to be good. We get the concept of value itself, and then following the concepts of value and contradistinction, we have time, right? There is no time. Right? I used to talk about this with my students back in the day when I was teaching the Bible. And yeah, this is a very interesting concept, right? There's no sun, right? Sun's going to come up later. There's no, stars aren't there. Nothing's there, right? These actual physical things that we consider to be sources of light, of physical light, are not there yet. But something about the creation of the concept of light and the concept of darkness as elements that are in contradistinction to one another brings time itself into being. So, right, perhaps the first idea about creation, understanding creation as this ongoing process or this continual development within this particular realm that we happen to live in, is that it is something that exists and has existence from some source that lies outside of space and time. And I hope that gets you excited, because I love the beginning of Genesis, because thinking about things that lie outside the bounds of space and time really gets me fired up. So speaking of fired up, we are going to turn our attention now to our matters of the day, the number one stonk out there. And before we do, right, of course, or as we do, we turn our attention to our gratitude today. Once again, newsletter is sponsored by our good friend Robert DeWerf, both the newsletter and video breakdown. Thank you, Robert. As well as to our monthly supporters, Not Medical Advice, Master Kurt Lusko, Cosmotropic, Day Swag 52, and Hey Luckies, aka Thankless Looter. Thank you so much for your continued support, and for everyone's continued support, both in comments, right? You guys were so active in the comments left yesterday. I really love this. Love the support, love the questions, love the participation. This also gets me fired up. So thank you for helping keep me certainly fired up, although there's always a lot to be fired up about with respect to GameStop. So, right, yesterday, right, we talked about basically, right, we can stop in for a little bit over here. We took a look at some technicals. Definitely, if you didn't have a chance to read yesterday's article, pop on over there or take a look at yesterday's video. It's probably suggested or something for you at the end of this video. But all right, and of course, we spent some time taking a look at our daily PMO. This, of course, is a very important indicator. Historically, crosses in this fashion where we get the 20 average and the 35 PMO average, which indicates if we see these moving up, it means that short-term momentum is skewing in a bullish direction. So this has been the case for a while. We've seen this continuing to move up very gradually over the past about month and a half. And it is nearing the 55 average, which is a longer term indicator, which is still a little bit bearish on its momentum. But when we see these crosses, right, this usually corresponds with some pretty explosive up movements in GameStop. So we can see these back beginning of April. We got early April cross. Not only did we have a couple days of bullishness, but wow, we really continued for a while. Going back, National Cat Day. Cat Day was our October 29th, or that Monday, I should say, the day right before Cat Day, was a major day of volatility on, upward volatility on seemingly no reason, right? The next day, of course, was Cat Day. But it was the 28th that showed quite a lot of price improvement. Cat Day, of course, saw some continued improvement in that regard. And then that really continued up probably on the heels of interest rate cuts, right? So this has happened a number of times in the past. We are getting very close. And yesterday we talked about how, it was really my outlook, certainly, that I think we're probably going to have to wait until pretty close to the end of August, if not the end of August itself, to see this cross and then to see this go ahead and develop. But we have logged a number of interesting green days in a row here. Volatility is down nonetheless. We did talk about that over in our options data yesterday. It did look like we had a pretty sizable skew towards really neutral on the price, but bearish volatility. A lot of short volatility bets on Friday came onto the tape. We saw some qualifying contingent trades, some big blocks of short calls, right? Again, at or slightly out of the money. So not really bearish on price, pretty neutral on price, but by and large, short volatility, right? Very bearish on volatility. Although we have seen some indications that maybe in the short term, it's a little bit less bearish. We do see a little bit in the way of some of those options bets, maybe skewing a little bit bullish, but we'll see in a second. I would not say too much as to overall override that overall short volatility outlook we have there. What I do want to turn our attention to for today, just to, I know a number of folks have probably already put this on your radar, but it is a very large number of fails, a historic number of fails on the Russell ETF IWM. So this is historic in terms of this is 3 million more fails than the highest recorded on IWM ever. Occurred in mid-July, so July OPEX. Now, I know what you're thinking, right? What exactly does this have to do with GameStop? I get this question a lot. GameStop's no longer in IWM. What's going on? Well, two questions of that. I know Richard's talked about this in some of his former videos. One of them is, well, we don't know if there are obligations stretching back a couple years that have been sitting in the obligations warehouse, just really untreated and not dealt with IWM, right? So GameStop I think it only towards the beginning of 2024 came out of IWM. So if there are any obligations in there that are sitting around, they might still be sitting there. But really, I would say as the second point, right, and what is sort of more important for our purposes thinking about this today is that this is indicative of some real liquidity problems, right? This was $2.5 billion of notional value was failed, right? So this is, and keep in mind, the way that this formula works, the way that fails are declared is that 6 days later, T+6 from the day of fails, these trades were not settled. So our friends at Mendel University, the Brno paper from 2023, identified the formula by which these fails on ETFs are actually logged, right? So conventional settlement is T+1. If T+1 fails, then they have T+3. If T+3 fails, then they have another T+3 from the T+3 of the previous T+1, equaling T+6. So 6 trading days in all. If they get to that T+6, it's only then that the fail goes down, and it goes down on T. So what that means, these are trading days. So it means that the 21st, 22nd, 23rd, 24th, 25th, and the 28th, these number of fails were not cleared, right? That's what that means. And then thereafter, they can have a 35-day calendar extension to go ahead and clear these fails. But they go down on the 18th. So this is specifically on OPEX. It means that, right, so usually they'll have this T+6, which would take them to the 28th, 35 calendar days, and then they have T+4 in order to put in a creation order to go ahead and clear these, right? It's important to keep in mind that when we see very large batches of FTDs, even though in the immediacy, this may not have to do with the delivery or undelivery or obligations with respect to GameStop in the short term, that everything is interconnected, right? Part of the reason why the GameStop saga was so big back in 2021 is GameStop went so critically off the rails based on retail participation, inabilities to clear obligations, the options chain going nuts, all of these things. It created a systemic risk for the entire financial system. It could have brought down the entire system if it were not contained. And the reason for that is everyone is so leveraged, everyone is so interconnected in terms of their derivatives bets, institutional derivatives bets, everything, this whole settlement system, obligations, that if something goes too wrong, everything is affected. When we see big splashes like this, billions of dollars in fails to deliver, this says there was insufficient liquidity leading up to and following July OPEX to be able to make these fails a non-issue. And they had to be declared and then basically bumped out into this C+35 and then T+4 area in order to go ahead and get cleared. If we project that out, it's going to be C+35 from the 28th. So that's going to take us to it's going to take us to the 4th, 11th, 18, right? 7, 14, 21, 28, 35. Take us to the 1st of September. And then they've got T+4. And isn't that convenient, right? That's going to fall. That creation order is going to have to get processed by the 5th, right? So who knows what that's actually going to involve. But my suspicion, right, that is a week leading up. That is the week prior to GameStop earnings. I would not be surprised if there were possibly some systemic effects with respect to derivatives or derivatives hedging that would lead to that week that first week of September, showing some serious volatility, upward volatility and price improvement in GameStop. This is when this massive batch of IWM fails is due to be delivered. Obviously, there are other ways that some of this can be internalized or can kicked or sort of rehypothecated elsewhere. But 2.5 billion in notional value, I suspect, is going to be very, very difficult to internalize otherwise. We don't really know what the composition of those shares is. It can be customized. Various elements within it can be packaged as cash in lieu of securities. So without getting too deep into that, I will say that that does look like we might expect something maybe market systemic or tied into whatever is may have some ripple effects with GameStop during that week leading up to earnings on the 9th, right on the 9th of September, that following Tuesday. So interesting to keep that in mind. I will say, I also will point our attention to FedWatch. Important to keep an eye on what's going on with FedWatch. We talked about interest rate hedging, how that seems to have an effect in GameStop when the likelihood of an interest rate cut approaches. As that goes up, GameStop seems to be swapped against interest rates. So hedging in terms of these institutional derivatives seems to have a bullish effect on GameStop. We pointed that out, especially last year. Within 2 days of actually getting rate cuts, GameStop really took off, right? So on the 20th, 2 days following the FOMC meeting on September 18th, on November 11th, right? So yeah, the meeting was on the 7th, the 8th, and the 11th. We started to move up. And then December, let's check the chart real quick. End of December 18th or so, I think, is when we started to get pretty frisky there. Yeah, 18th is when we had the meeting. 20th is when we started to move pretty hard to the upside. And of course, no offerings from the company during those periods. Although the first cut actually did result in the buying of the offering. So it seems like that third offering last year was made in anticipation of the cut. And the need for institutions potentially to go ahead and buy shares in order to hedge derivatives, possibly with interest rate swaps. So we do see the probability going down. Not really sure what's going on here. Technically, that should correspond to a bit of a dip, right? So this not anything major. Maybe we're talking 20-30 cents off the baseline. Good to keep an eye on what's going on with Bitcoin also. If both of these kind of move down, we may see a little bit of a depression. And we do see Bitcoin actually on its way down versus the dollar. I mean, it's still up, right? But we still see this kind of falling off. So if we see this Bitcoin depression, if we see a little bit of volatility, the probability of an interest rate cut go down, right, regardless of whether that changes any plans or not, if we just see that probability go down of a cut, that's right. The hedging is based on probabilities of a cut ahead of the cut, and then it reflects the reality thereafter. So if we see this, I mean, it does look like Bitcoin might bounce here right off the 50-day moving average. So I don't know if it'll go down too much lower, but we may see some of that take effect on GameStop's price midweek. So it's always good to be careful of that stuff, to keep in mind that we do have a couple of these variables that are likely fluctuating with respect to what we would have, say, over our fair value. If we have anything baked into the stock over our fair value, that's actually assessing or affecting that fair value calculation, which I think at minimum is something like 2x cash per share. So yeah, let's go ahead and take a look at some of our options data. I did say at the beginning of the video, we were looking at, we did see a couple strikes where we got some movement in terms of bullish skew. It's not crazy. It doesn't overwhelm that bearishness that we saw going into the end of last week, coming into this week, I should say. QCT trades, we had a lot of things that looked like they were qualifying contingent trades. What I would say is, though, luckily those, or I suppose fortunately in terms of GameStop's movement, not a lot of that was focused on those deep in the money put trades, and certainly don't know to what degree these were short. One of them certainly was. Don't know if others were covered or closed, or if they were processed at the ask, but in reality, they were really short. Usually shorts are going to get processed at the bid, but doesn't have to go that way. So Max Payne still sitting at 2250. Our gamma landscape. So yesterday we looked at what gamma exposure looked like really proximately going into Friday. It hasn't changed much. Although gamma does go down a little bit at 23 because we are over that mark. We did close over that mark a little bit, not too far away from it, but we've got this kind of tripartite gamma exposure position that's going to make moving through like kind of on normal volume, normal options volume as well, and the hedging components associated with it, going to make it a little difficult to move through this 23 to 24 area. I am not expecting us to move outside that bracket, largely because of the character of all of the concentrated, especially short call gamma that is at these strikes. Although those long calls do kind of normalize that a little bit, it is going to be volatility suppressive, and we did see that, right? We had a 10 percentage point drop in the Schwab composite IB yesterday. We opened at 75% composite overall, and we dropped to 65 by day's end, despite the fact we had that little bullish episode going into the close. So that is getting into that really volatility suppressive area on based on gamma exposure. But here, if we look at our strikes overall, we can also see that this character is reflected. I mean, this is probably this is from the near-term positioning. And then, but even if we do, if something, kind of critical happens and we break through this tripartite area, something unexpected occurs, then we do have 25 there as another backstop position that's, out several weeks. So it's not super proximal, but in the weeks to come, that 25 position is there to keep us hemmed in. So, just keep that in mind. That's what I'm keeping in mind as I'm going into my trading this week, when I'm thinking about positioning, when I'm thinking about what I'm going to do in terms of, in terms of options trades, especially what I'm expecting from price stuff, and how that'll affect my positioning. So good luck out there. Stay sharp. Always prepare for the potential of the unexpected, and get jacked up. Get jacked up. If for the only reason being that we live in a very complex environment. We live in this wonderful, magnificent, mystifying, but also exciting and enthralling environment whose reality stretches back through the entire history of creation to a place beyond space and time. So get jacked up for that. Get jacked up for. I'm certainly jacked up for that. I'm certainly jacked up for the number one stonk out there. So have a great day. Thanks for watching and listening, and we'll catch you guys tomorrow. Take care.